Hi, welcome back to our channel. This video is a continued part of our previous video on technical analysis. Before proceeding to the topic, we would like to share our objective behind our channel. As almost 95% of Indian traders lose money in the stock market, our motive through this channel is to educate the new investors and traders about stock market so that you can earn money from the market and not to lose your hard-earned money. So let's start the second part of the technical analysis. Let's gain some understanding of chart patterns here. A chart pattern in technical analysis is a pattern which naturally occurs and repeats in a stock with price action over a period. We'll take you through the types of chart patterns most commonly used by traders worldwide. In chart patterns, firstly, the trend lines, which are considered to be the base to identify support and resistance frame. As displayed in the screen, you can see the trend line is drawn by connecting the support points and resistance points in a chart. So here, to understand support and resistance, you can look into the screen here. The low levels touched by a stock becomes a support and the higher levels which are touched by a stock becomes a resistance. Here we can understand that trend lines can be used to identify the direction and duration of a price movement of a stock. But do not forget to use the time frames like hourly and weekly time frames to get a proper understanding on the stock movements. Once properly drawn, the trend line frame can tell you whether the stock is in an uptrend or in a downtrend. The next pattern is the double top pattern. Also, these patterns can be renamed as reversal in trend. So before we understand double top and double bottom patterns, let's understand the words bulls and bears. You might have heard these words often in the stock market. So simply to define, those who believe a stock price will go up and they'll start buying it, so they are actually called bulls. And opposite to that, those who believe the stock will go down and start selling the stock are called the bears. So let's take a look into the reversal patterns in stock market. So it includes double top, double bottom, triple top and triple bottoms, and head and shoulder patterns, cup and handle. Coming to double top pattern, it forms an M shape and it is a pure indication of a bearish reversal trend in the market. So exact opposite to that, the double bottom pattern works as a bullish price movement reversal and it forms in W shape. The next two reversal trending patterns are triple top and triple bottoms. Triple tops usually appear in an uptrend. As you can see in the screen, this pattern is created with three peaks at the resistance level, which it is unable to break the resistance and comes back to the support, and finally the support is broken and the reversal trend of bearish movement starts from the support breakdown. Similarly, triple bottoms work opposite to the triple tops. It appears after a downtrend. The price tests the support 3 times, then breaks to the resistance to opposite to downtrend to continue on a bull run. The next trend reversal pattern is a most reliable one. It even oftenly occurs in the market. Is the head and shoulder pattern. So this is a bearish trend reversal pattern. As the name itself suggests, you can see a left shoulder and a head and then a right shoulder, then the neckline where the price breaks down, then the bearish movement starts from there. The next pattern is the inverse head and shoulder pattern, which is the opposite of head and shoulder pattern. When the inverse head and shoulder pattern appears, once the neckline is broken, basically the bullish momentum of a stock will be started from there. Moving to the next pattern, the another interesting pattern is the cup and handle pattern. Usually this pattern takes so much time. Sometimes it may take more than a year or 30 to 40 weeks to form in cup and handle pattern. But once a cup and handle is formed, the breakout will be towards a higher price. The bullish momentum will be continued further. It will be effective only if the cup and handle shape should be on a U shape. It also has an opposite of downtrend indicator, which is called inverted cup and handle. The next one is the price momentum continuation patterns. Most importantly, there are two patterns in flag pattern. One is bullish and other one is bearish pattern. So here the flag pattern is similarly like a pole and flag. It could be in opposite direction or in a straightforward flag and pole pattern. You can see in the screen the examples which are shown in the screen. The two parallel trend lines are defined to identify the flag and pole patterns. The next continuation pattern which we are looking at is the pennant chart pattern. If we are guessing, this pennant chart pattern also looks similar to a flag and pole pattern, then you are absolutely right. Here two things to be remembered are, during the consolidation in the pennant, the breakout should happen with a higher value, and the breakout will continue after the consolidation is over. The next potential chart pattern we are looking at are the triangle patterns. These patterns could be of a continuation pattern or a reversal pattern. There are three main triangle patterns. First one is the ascending, second one is the descending triangle pattern, and the third one is the symmetric triangle patterns. The last chart pattern we are looking at in this technical analysis second part is the wedge chart patterns. Wedge patterns has rising wedge and falling wedge chart patterns. Here you need to understand that rising wedge is a signal for bearish reversal and falling wedge is a signal for a bullish reversal trend. So that's it from us for the chart patterns in this second part of our technical analysis video. So in the third part of the technical analysis, we will give the details on candlestick patterns, which is also as important as chart patterns while trading or investing in a stock. Hope this information will change the way you invest and trade in the stock market, and it will be helpful for you to make good investment and make good profits from the stock market. Thank you so much for watching our video. Do like and subscribe our channel for more content like this. See you in the other video. Thank you so much again.